Welcome back to Alpha Cave. We're going to be talking stocks today. This is not financial advice. This is just something I do when I look at stocks and deciding whether I want to buy them or not. There are certain things that I look at in stocks. I like companies that have very little stocks. There's some that have very few, and it's always nice to invest into those companies if they're good companies based on other criteria as well. But when they have very few shares, that's fantastic because that value can really go really high and skyrocket. The other thing is some companies break that rule. Some companies have so many shares that they do very well, and we invest into them anyway because they're good companies, but they still have so many shares that maybe their price to book value and their ratio is not very good. So we're going to be looking at number of shares, we're going to look at their book value, we're going to look at the price to book ratio, and I also threw in the yearly dividend just so that you can kind of have an idea of what we're looking at here. So most of these shares I have, I'm going to go over Berkshire, the A shares as well, just to throw that in so that we can compare it to the other companies that I do purchase. So let's start first of all with RITM. RITM is a REIT, Rhythm Capital. It's a good price, $10.40. Actually, right now, I like to buy it under $10. And so usually if I put any type of puts on it or I sell puts, I'm selling it at $10. So when this price goes under 10, it's perfect because I can make a little bit more money by selling those puts at $10. The book value for this company is $12.14. The price to book ratio is fantastic, 0.86, and they do have a yearly dividend of $1. Let's compare that to Apple, which is next. And Apple, as you see, the price is pretty high, and actually it's been higher recently, and then it came back down. But $189.46, but look at the number of shares that they have, 15.6 billion shares. So the book value on these shares is only $3.86. The price to book ratio is 49.08. Keep in mind that a ratio of 1.0 is actually great, and anything over that is a little lower. Some people say maybe up to a 3 is a good ratio to have. The yearly dividend, they do have one, so it's 96 cents per year, so that's great. Now, if we look at Amazon at 138.12 cents, and they have 10 billion shares, 10.3 billion shares as well, but their book value is a little bit better, 16.34. Their price to book ratio is 8.45, which is a bit high, and they have no dividend. Now let's go on to Disney. Disney has been struggling with their price. Their price is at one point was about in the 160s, I believe, came down all the way to 81.64 currently. Now let's look at their shares. They have 1.8 billion shares. Their book value per share is 55.52. That's actually pretty good. Their price to book ratio is 1.47. I like that ratio actually. So Disney looks like a very good purchase at this point to me. And I do have a whole bunch of shares of Disney, but I have them at a much higher price. So I may consider buying more shares at this point. Even though they have no dividend at this point, they will start a dividend hopefully by the beginning of next year. So we'll see how that goes. Now let's go on to IBOC. IBOC is a bank, and it is at $46.33 per share. They only have 62 million shares. Their book value is good at 35.33. Price to book ratio 1.31, which is great. And their yearly dividend is 1.26. So I like that dividend. We've had those shares since the 70s actually. So that's actually a fantastic stock to purchase, and not too many shares, even though they've been around for a good long time. Now, I did throw in Berkshire because I wanted to compare this to some of the other stocks that we have. Their price is $550,000 per share. They only have 1.4 million shares out. So their book value is fantastic. It's $328,107.88 per share. Price to book ratio 1.68, which is really good, and they have no dividend. On this one, we're just looking at that stock price to continue to go higher and higher and higher. Smith & Wesson is a company I have because I made some money off of selling a put at a decent price. Then I ended up buying those 100 shares, and currently the price is $11.71. They only have 46 million shares out, but the book value is at $8.38. The ratio is at 1.4, and they do have a 48-cent dividend per year as well. The last one is AG&C. Again, that is a REIT. Price is $9.96, 606 million shares. Their book value is at $10.30. Price to book ratio 0.97, and yearly dividend of 1.44. Based on these ratios, if I was just buying shares off of ratios themselves, RITM, AG&C would be high on my list. I would definitely get the IBOC, which I do have, and I would buy the Smith & Wesson as well. Disney looks like a very good buy at this point as well. So Disney, I may purchase more shares. Disney I like, even though it's low. It's a very big company. I love what they do, and it's going to be around for a long time. And so that's why I like Disney, and I'm going to keep on investing into Disney, or keep my shares of Disney for a good while. If I do decide to sell any of my other shares, say Amazon or Apple, I think those are going to go into RITM to buy me more shares of RITM, or put more puts, sell more puts there, so that we can increase the amount of yearly dividend, increase the amount of revenue coming in. And so that's what I'll do with those. But Apple, I'd be very happy selling in the 200 plus range. Amazon, I'd be very happy selling in the 160 range. So hopefully they're getting there as well. But I still look at the price to book ratio. I like that, and I'd like to see where they are. These numbers are very indicative of where the company is at this time, and this is something that I think everyone should kind of look at and decide whether that's a good way to determine whether to invest into a certain company. At least it's one way to determine how to invest into a company. You don't want to invest into a company that's too overpriced and that you think may fail in the future. All right, guys, so this is a little bit of information as to how to determine how to pick a stock, how I decide to pick a stock sometimes. And it's not only based on this, but this is part of it, and this is sometimes a big part of it as well. The price to book ratio is something I always look at, and I like to see it look at least favorable as far as I'm concerned. Tell me what you guys think about these stocks. Tell me what you think about the price to book ratio. Tell me if you use that. Go ahead and comment some of the things that you use to determine what stocks to buy. And guys, thank you for tuning in, and we'll talk to you later.